going to recognize this, okay? Let me see if I can do a little ballpoint pen thing here. All right. We'll do a felt tip pen. We'll pick a nice color here. Okay, all right.
Yeah, so real quick, what we were just looking at, that was income method number 1 when you had sold the call the correct way. And then you maneuvered it using another income method that's discussed in the blueprint. And now we're looking at a third income method.
That's right, okay. Income method number 1 I give away for free. I mean, anybody with $3,000 to blow and a weekend to kill, knows how to sell covered calls. Okay, so I just give that away for free. But here is conditions under which income method 6 works and certain conditions under which it's not advisable. This is one of the good ones. Okay. Now, if I buy to open a May $75 call and sell to open a May $70 call, okay, what is that called, Mike?
Typically, it's called a bear call credit spread.
Bear call credit spread. Okay, the credit that I took in was $1.25. Okay, that's the difference here between these two amounts. Okay, now with $1.05 at risk, and I brought in $1.25, now I have a negative risk. Again, I am bulletproof. Okay, I've covered all the risk. Southwestern can go up, it can go down, it can go sideways. We're going to make money guaranteed. Okay, but experienced spread traders are going to recognize this as a bear call spread. And what do we not like to have happen if we put on a bear call spread?
Well, it's a bearish strategy. We want the stock to stay the same or move down in price. We don't want it to go up at all.
What if it went up like significantly?
Well, if it went up above 75, I'd have the max loss for the position. I'd lose about 5 points minus the credit I took in. So we'd be at a 375 loss, the full maximum loss for the position.
Right. Okay, I want everybody on the line to remember this number right here. Okay? If I just sold a covered call, if I just used income method number 1 here, I would be bulletproof. Okay? I would take in $2.76, and I'd be bulletproof. There's no way I could lose in the trade, but I might be limiting my growth, too, if the stock goes up.
Right.
Okay? On the other hand, because I also picked up this call here, well, did you catch this? I've been paid to own a $75 call option.
That's right.
I've been paid to own it. I'm still bulletproof, right? But the really cool part is that I can take out even more money. Okay, so I now own this $75 call position, all right? And here's what happened. Another week later, I sold to open a May $80 call against for $2.50. Now, somebody wrote me and they said, "Dude, you're naked." And I said, "Dude, really?" I used to work for an emergency room doctor. I found out most people shouldn't be naked. But I told them, no. I sold this call. What did I sell it against? I didn't sell it against the stock. There's already a short call against the stock, but I own a $75 call. In fact, I get paid to own it. So now, for me to sell to open a May $80 call against my $75 call, I'm not naked at all. It's a spread trade. It's called a bull call spread, right? Okay, so the May expiration comes, and Southwestern continued up. It continued up, and it was above $80. So this bull call spread that I created closed in the money, and that locked in another $500. Okay, now let's compare. First of all, if you buy a stock to sell calls against, you take on all the risks of ownership. 100%, okay, if you're just trading plain vanilla covered calls. If you're trading a radioactive profit machine, you would take on, in this case, 5.43% risk, okay? So if she goes down, you could really get hurt with covered calls trading, but you're not going to get hurt by more than just a small amount of your invested capital if you have a radioactive profit machine, okay? Now, secondly, I know that the covered call gurus will tell you that you can keep selling calls against so that your cost basis is zero. How long would that take? It would take a long time.
Take a long time.
Yeah. Okay. And cost basis zero is another way of saying bulletproof. Okay. I like to say, hey, you can get bulletproof in a few weeks. I've shown a few examples of that already today. Okay. But the thing that I wanted folks to really understand was this. Plain vanilla selling calls, if I sold a call only, that May $75 call, I could have gotten $276 in premium. But instead, I was bulletproof by doing income method number 6 and ended up with $875 in premium instead. Here's how. Okay? Did the bear call spread, $1.25 in premium instead of the $276. Then, about a week later, I sold to open a $80 call against the $75 call that I got for free. Okay, and then the stock kept going up, and so that closed in the money. 75 slash $80 book call spread closed in the money. So it was like I sold a covered call for $875 instead of selling a covered call for $276. Does that make sense?
Absolutely.
See, that's the value of understanding how to trade time. Okay, so rather than just doing plain vanilla covered calls, okay, we're looking at doing this income method number 6, and income method number 6 helped me to make more money than if I had simply sold a covered call. Okay, all right. So I'm going to do another poll here. Okay, do you remember when earlier, Mike, when we did the poll that says, hey, are you happy with your trading over the last 12 months?
Right. Mm-hmm.
Okay, did you write down the answers? Who said, how many folks said yes? How many said no?
Remember, we only had 8% that were happy with their trading results. 42% said no, and 50% had mixed emotions.
Okay, all right. Now, I'm going to pose this question to you, and I want you to make sure that you understand the question before you answer it, okay? If you're able to keep all the winnings that you had from your last 12 months of trading, okay, but your losses were reduced from whatever they were to just 3 to 6% per trade, would you have said yes? Would you have said yes, or would you have maybe said no but been closer? Or would you have still said no? Okay, that's the answer. Okay, so those are the answers. If you're able to keep the winnings from your last 12 months, but your losses were reduced from whatever they were to 3 to 6%, would you have said yes? Okay, we've got most of our votes in. This is pretty interesting. This is very interesting. I'm going to hold out until we have 90% of our votes in, okay? Okay, there we are. Okay? I'm going to close that poll, share the results, okay? Mike, it's interesting. Only 8% would have still said no, okay? And remember, 92% basically said no, didn't they, before?
Yeah, they weren't happy. That's right.
Yeah. 17% would have said no, but been closer to yes. 75% would have said yes. Wouldn't it have been wonderful, Mike, if we did that poll at the beginning and said, hey, are you happy with your trading from the last 12 months? And 75% of the respondents said yes.
Yeah, that would have been great. Mm-hmm. Yeah. Absolutely.
And 17% would have said mixed emotions, wouldn't they?
Mm-hmm. That's right.
Because they're saying no, but they'd be closer to yes, right? That's kind of the mixed emotions category.
Mm-hmm.
This is like a total reversal of what we had before, isn't it?
That's right, yeah.
Wow. Yeah, how about that? Okay. All right, so I'm going to go ahead and hide the results. That's really fabulous, okay? So what you're saying here, the 75% that would have said yes, they used to be in the no category, right?
That's right. Mm-hmm.
Okay. Well, the blueprint is all about what I call the real holy grail of trading, risk management. Rather than picking stocks, pick stops. And bulletproofing the income methods. Rather than timing trades, trade time. Now, we're going to show, you know what, should we, before I show income method 3, Mike, should you do the power options platform demonstration?
Well, sure. Yeah, this is a good time because you just ran that 3 to 6% poll, so we can start by going right to that trade simulator tool there, and show people how you kind of see the risk reward there. All right.
Okay, good. Now I just attempted to move the screen over to you. Did
we
you
are
get
all
it?
set.
You have control now.
Yep,
okay,
you
good.
should see my screen right now.
Check this out, ladies and gents. This is really something. I don't know what I've been doing for the last 7 years without this. It's pretty phenomenal. So go ahead, Mike.
All right. Well, what I'm going to do first is I'm going onto the sitemap here, and down at the bottom on the far right-hand side of our sitemap, I have a link to the trade